Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how you guys can learn to swing trade. This is going to be a full video breaking down brokers and strategies and indicators and everything you guys need to get started with swing trading. So I hope you guys all enjoy this. If you guys do, hit that like button, subscribe, and if you guys are watching and you're like, who is this guy? My name is Carter. I'm a full-time swing trader in the stock market, and I have been for over 6 years. And with that being said, we do have an amazing community and school. It's an 8-week course where I teach people how to find undervalued stocks, my strategies, my mindset, my approach, my emotions, the psychology of a trader. I don't believe in getting rich quick. I don't believe in alerts. I believe in teaching people the proper scanners and proper ways to swing trade like I do. So I hope you guys all enjoy it, and you guys can use code LEARN to get 50% off. So check it out down below. You won't regret it. And guys, let's get started here. So how do you swing trade in the stock market? Let me make myself just a tad smaller, and you guys can get, use code LEARN to get 50% off. So check it out. But why should you swing trade? So swing trading offers a balance in between fast pace of day trading and the long-term approach of investing. So in simple terms, swing trading, you capitalize on short-term movements. Day trading requires a lot more time, a lot more involvement. You have to be actively in tune with the market each and every day. Compared with swing trading, you're holding a position for 6 to 9 days, so you have a little more flexibility. You can do it with a full-time job. You can do it with a part-time job. You can do it after hours. You can plan out your trades and all that stuff. I really think this is the best of both worlds for people with jobs and want to maybe start a side hustle or business and want to make a little extra money. So another thing here, one of the things that swing traders do is they focus on technical analysis. So technical analysis is looking at indicators and charting, compared to fundamental analysis is looking at the revenues and cash flows and balance statement, all of that stuff. So swing traders normally will look at more technical, whereas investors and long-term investors will look at fundamentals. The great thing about swing trading is it provides flexibility, making it ideal for individuals who want to actively trade but may not have the time for daily trades, where also you're still seeking out higher returns than traditional buy and hold investing. So what is swing trading? So we kind of mentioned it a little bit, but in simple terms, swing trading is when you buy a stock, you hold it for more than a day, but less than 1 year. When you buy a stock and sell a stock during the same trading day, it's considered a day trade. Whereas if you buy a stock and you hold it for more than 1 year, that is considered a long-term investment. So, swing traders typically hold it for 6 to 9 days. Obviously, there will be periods of time where you hold a position for several weeks. It all depends on the approach and style you have with that certain stock here. So for me, guys, I like I said, 6 to 9 days on average. So brokers. So brokers is how us as traders and investors have access to the stock market. Because back in the day, you actually would have to call up your broker and say, hey, I want to place an order for 10 shares of Apple stock, and they would send that order to the exchange and they would take commission. Nowadays, you can do it right online or right on your phone. So that's great, but it's also, in some cases, it makes it a little too easy to get in that driver's seat and start trading, right? Trading is a job, it's a career. You got to treat it like one. So the best approach that I would recommend, we'll talk about it in a minute, it's having realistic expectations. But let's get back to the brokers here. So the brokers I use and I would recommend are Moomoo, which Moomoo is a trading broker. It's commission free. It offers advanced charting. It offers real-time data. It offers advanced scanning to look for opportunity that meets your needs. and Robinhood. Robinhood, obviously, I think is probably one of the most popular brokers out there, and you can easily swing trade with Robinhood. The benefit of Robinhood is it's very easy to use. It's more beginner friendly, whereas Moomoo does have a little more features for traders, but overall you can still do it just fine. And if you guys want to sign up for either of these, check out my link down below. For Moomoo, you guys can get up to 20 free stock by signing up, and for Robinhood, I think it's like $10. So both are great things there. All right, this is one of the most important tabs here, or slides, that we're going to be talking about. So swing trading is not a get rich quick. I will say it again. Swing trading is not a get rich quick. If you are just starting out, expect 2 years. I know that sounds crazy, but it's realistic that you can easily become a swing trader if you put in the time to do it. It does take time, just like anything. So you got to treat it like a job, like an engineer, doctor, lawyer, all those. Those takes years of practice and education before you guys can actively be consistent with your trades, because anybody can buy a stock and you're right 50% of the time. But in order to make money consistently in the market, you have to have an edge. You have to build up that strategy. So let's talk about the months that I would recommend. So from months 1 to 3, you're going to learn kind of what trader you are. You're going to learn different trading styles. You're obviously going to take courses like mine, because you can get 50% off by using code LEARN, and you're going to be reading books and exploring platforms. This first month is just kind of learning what type of trader you are, because yes, I swing trade, but maybe you like the fast-paced environment of day trading, and maybe you seek out that route. That's completely fine. Now, during this time here, do not fund an account. A lot of people love to think you just need to jump in. No, you don't. We'll talk about it here in a second. Then after months 1 to 3, then you're moving on from months 4 to 6. This is where you're going to paper trade. So paper trading is using simulated money to practice your skills without real financial risk. During this, you're going to develop and test personalized trading strategies based on your chosen style. So if you're a swing trader, then you're going to focus on swing trading strategies. If you're a day trader, obviously you're going to focus on day trading strategies. Now, during this time here, don't fund an account, but what you're doing is you're still going to continue to learn and review those courses that you maybe took or YouTube videos, and you're going to pick bits and pieces of things that you like, you understand, to start making your strategy. Do you guys remember in school where your teacher would tell you to write an essay, and it was terrible, but they would say, okay, you got to make a rough draft, right? Your trading strategy is going to be the same thing. The first strategy you make is never going to be your final copy, because you're going to continue to change and alter it probably for the rest of your trading career. So, the thing about it is just continue to learn, and you'll be in a great spot. The next thing here is from months 7 to 12, you're going to refine your strategy. So you're going to continue to paper trade and focus on improving the things that maybe you're lacking on. So it could be technical analysis, risk management, discipline. During this time, you're going to continue to track your trades with the trading journal. We'll talk about it later. You're going to analyze mistakes so you can never make the same mistake twice, and you're going to make necessary adjustments to your approach. Now, doing this, you're about a year into trading. You have pretty much a plan and a strategy that you really understand. Then the next, after 1 year, what you're doing is you're slowly transitioning to live trading. So I would never go from paper trading to a large account. I would never do that. What I would do and what I would recommend doing is go from paper trading to a small account, whether it's $50, whether it's $100. What this does is it helps you build up emotions. It helps you build up your emotional tolerance, because as you paper trade, what paper trade lacks is emotional ties, because it's not your money that you're losing when you lose trades. So what you need to build up is the emotion aspect of trading. So during this time, you're going to fund this, that same Moomoo account with $100 or $200, whatever a small account to you is, and you're just going to start that same process of working on your strategy. So during this time here, you can finally start live trading with a small amount of real capital while maintaining your strict risk management. Continue to improve your strategy based on market conditions and your own trading experience. Focus on consistency and scaling. Work on consistent profitability and gradually scale your capital as you gain confidence, deepening your understanding of the market, psychology, trade management, and emotional control. So, like I said, 2 years is very, very realistic. If you are jumping into trading and you want to make $1 million tomorrow, I'm sorry, but I am not the best instructor for you. I'm sure there's traders out there that will gladly take your money for saying you can get rich quick. I'm not that person. All right, so popular technical indicators. So indicators are honestly some of the best things traders need to understand. But for me, I don't want to have a million different indicators on my chart. I love the expression MISS, MISS. Make it simple, stupid. I'm not going to overcomplicate my trades. I'm not going to have a million different charts on my screens with a million indicators and different scanners running. No, I'm not going to do that. I'm going to have 3 indicators that I understand 100% of. So the first one here is moving average lines. Moving average lines are lines traders use to spot trends, support and resistance levels, and key crossovers like the golden cross here we'll talk about later. So another indicator is the RSI, also known as the Relative Strength Index. This helps traders identify potential reversal points. Pretty much anything historically under a 30 with the RSI is an undervalued point. Anything over a 70 is overvalued. The last one here is the MACD. The MACD indicators helps traders identify potential buy and sell signals and trend reversals. So understanding these indicators, and I know I probably just threw a lot at you, but don't worry, we'll talk about them later when we review some of our trades. So this is an example here of a golden cross. And you guys can see here that the golden cross here, well, the golden cross would be down here. So you guys can see where we have this moving average line break up through another moving average line. This is a crossover. So normally you'll have a lower time frame moving average line. So it could be the 50 or the 90 moving average line break up through the 200-day moving average line. This could represent a good entry point for traders. And then on the complete opposite end, where you have it break down, could represent the best time to sell. So the next thing here that you guys need if you're just getting started with trading is to journal. Journaling your trades will literally change the way you trade because you'll never make the same mistake twice, and you'll always know what's working and what's not. So you can continue to work on things that are working and kind of just brush away the things that aren't. So, journaling your trades is essential for improving your trading skills and achieving long-term success. Let me move myself off to this side here. So track your progress by documenting each trade. So your exits, your entries, the market conditions, but more importantly, your emotions. So why are you placing the trade? Are you emotionally tied to the stock? You can evaluate your performance over time and assess if you're improving. You'll also improve discipline. You'll continue to refine strategies, and you'll just have a lot more emotional awareness when you track your emotional state during the trades to help identify some triggers that could mess you up, like FOMO, fear, greed, all of those very important things here. So don't forget, you guys can use code LEARN to get 50% off our school, where we break down how to find some of these undervalued positions. So that's all for this. Now let's talk about here some positions we're in and pretty much how to go about doing this. So we did take 2 trades today, and we'll talk about why we took them, but let's talk about a trade that's been working very, very, very well. So this is a stock here, ticker symbol AVGO. So you guys can see here we have these lines. We have this red line, blue line, and then the green line. So the red line is that 200-day moving average line that I mentioned. The blue line is the 90-day moving average line. The green down here is the RSI. So before I ever place a trade, the first thing I look at is the overall trend. And you guys can see just by looking at the stock goes up into the upper right hand corner of the screen from the lower left hand corner, establishing an upward trend. The next thing is support. So support and resistance are key levels that traders look for. Support is where we get buying pressure. Resistance is where we get selling pressure. So looking at this, you guys can see that each and every time it hits this red line, what happens? It gets buying pressure. Hits it, and we had buying pressure. So as it hits it again, we understand that this level acts as support. So this would be the best entry point to enter, but you never just make a trade based off one indicator. You also want to look at the RSI, which was trading for a 30 at the time. So as we look back at the last time it was trading for a 30, was back in here, where the stock went from $39 to about $52 in the matter of about a month. So now, as you look at it, it gives you a lot more possibility for future, growth out of this. So the next thing here that I always look for is I go to a lower time frame support. So I go to the lower time frame, and you guys can see that beautiful golden cross. So you guys can see where that blue line, so that 90-day moving average line, breaks up through the 200-day. But that's not where we entered. We actually entered on the breakout of these lines, because moving average lines act as support and resistance. So when the stock is above it, you can see where it hits it and we have good support. On the flip side, when the stock is below it, you can see where it hits it and we just have a lot of sell-off. So for me, you want to enter on the breakout and sell on the dip down. Those two little key things are very, very, very important here. So the next thing here I want to show you is some stocks that we entered and why we entered. You guys can see ticker symbol CL, we entered because of the breakout of the hourly trend. You guys can see that this stock was forming this downward trend. The stock broke out, so we entered near and around the 102, and the stock has rallied its way up ever since. It's not right now trading for 103, but that's completely fine. I do have a lot of potential out of this, and I do have a stop loss already in place. Looking at the daily chart, you guys can see just how important this trend line is, where it hits this trend each and every time, forming this heavy support. So there could be a nice move from about 102 to about 109. Now the risk and reward for this trade isn't the greatest, I grant it that, but what I did like is how right there. So it's about a 4-to-1 risk and reward, but I did like how it's already breaking out of the trend for a possible reversal. Another stock here is ticker symbol JPM, also known as JP Morgan Chase. You guys can see as we look at this, what do we notice? It has heavy support on the 90-day moving average line, where it hits it and we get natural tendencies of support. So now with the stock rallying its way up, we have our stop loss already set, and the risk and reward is very, very good. So right here, our target price is up here at resistance. Our stop loss is right down here. So the risk and reward is about 2-to-1. So it's not as good as some of the others, but it's still very good, and I do like the company. As well as the RSI was at about a 35, which last time was trading for a 35, was back in here where we had this great move. So we had a lot of great potential out of the stock, and going to the lower time frame, you can see that nice trend line there, which is very, very important here. So what makes up a successful swing trader isn't these massive returns of 100, 200%. It's those 1, 2, 3% returns that just compound over the course of a year. I'm not a trader that expects to make $1 million every single trade. No, I will gladly take 1 or 2% and just compound it, right? If you can make 1% every single week, that's 52% every single year, which is pretty much times 5 the S&P. So if you guys want to learn how to trade, check out our school where we talk about how to find these stocks, other strategies, other approaches, other indicators you guys can use to help you with your trading journey. So I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care, guys.